Another crazy day in markets. Today, the S&P 500 actually rose. However, we did finish the week down, and we were down actually 4 weeks in a row now here in the marketplace, and it doesn't happen very often. You can see we've seen 3 weeks in a row down, and barely 4 weeks here in August. We had 3 weeks here back in April. But it doesn't happen very often where you get 4 weeks or 5 weeks down in a row. So again, market's probably pretty oversold here. You even closed below the lower Bollinger Band on the weekly chart. And, that's part of the problem right now, is that the market has really seen a very sharp sell-off in very, quick fashion. And that makes it vulnerable to these kind of really big and unpredictable rallies like we saw today. More interestingly, the S&P 500 has been kind of consolidating, at least the last couple of days, right around this 5630 to 5620 area. Today we were basically, right below the 56, right around the 5630 area. In the last final minutes, really, we saw the index break out. And I think most of what we were seeing today really had to do with a very sharp drop in implied volatility. You can see the VIX basically peaked just around 30 on March 11th, and we've come down to around 22 now. And the question really becomes is how much more implied volatility melt can we really see? Remember, next week we're going to have retail sales on Monday. We're going to have the BOJ meeting on Tuesday night here in New York. And then Wednesday, of course, we're going to have the Fed meeting. So I would think that probably the first half of the week, it's going to probably be hard to see implied volatility really come all that much lower. Again, an implied volatility of VIX of like 22 divided by 16 implies like a 1.4%, daily move. And we've been kind of around there, for a couple of weeks. And so I don't really know how much more, downside there is to the VIX, at least currently, at least until Wednesday, when we also have a VIX option expiration date. At least when you look at the option positioning, it looks like there's a pretty sizable amount of gamma built up around the $20 vol strike. So, again, that may offer a little bit of a floor. The one thing that is worth pointing out is that there's also a good amount of delta there. And so, if they're really intent on trying to burn that delta, they could certainly continue to try to push the VIX lower next week. Although, again, like I said, I just don't know how favorable it is a setup in terms of the amount of things that are going on to begin the week to see the VIX really see a significant melt. And if you're not going to really get a significant melt in the VIX, it's hard to really imagine much of a rally really capturing, getting going here in the S&P. There's certainly room to push a little bit higher, maybe even fill a gap up here around 5780, which would be a pretty sizable move in reality, maybe about another 2.5%. But after that, it really starts to become a little bit questionable in terms of where this market is going to be going. Likewise, because again, we do have OpEx on Friday, because that too can play a major role in where this market is going to go. Again, there's a lot of gamma built up and negative gamma built up in this market, which could serve, as resistance. The reason why I think we also didn't move lower today is you didn't really see that put wall move down today. We closed last night right around 5,500, and we never really got it down to 5,400, and that just didn't really allow for a setup that was going to allow the market to really materially move down. And so you saw the opposite happen where we moved off of it. And certainly there's also a lot of negative delta out here as well. So there is the opportunity here for the market to push higher going into the beginning of the week. I just don't know with the news flow how favorable it will really be. Additionally, we also saw the Japanese yen weaken a little bit today, and the important thing here is that we have this BOJ meeting coming up to start next week, and this is going to be a really important meeting from a standpoint of what the BOJ's next major move is going to be. Here's your downtrend right now, and we're at a very important point, because if you break the downtrend, you break support, you could see the yen kind of move back up here, maybe move back into the mid the 151 to 152 region, and that too would allow the S&P 500 to rally, at least to start, because again, that's really that's really been what we've been seeing taking place in the market right now. The S&P, for the most part, has been trading pretty closely with changes that we've been seeing in the yen, and part of the reason, again, we saw the equity market here in the U.S. rally today because it also had a favorable setup in terms of the yen weakening a little bit today, and that also was a favorable tailwind. And so, but really, I guess the broader picture is, where is this market going to go over the next couple of weeks? And I think that becomes a much more challenging situation because, again, there's a lot of uncertainty that's still baked into this marketplace, meaning we don't even know anymore what the potential impacts are going to be to earnings with all of this tariff policy. Additionally, we've seen the dollar obviously weaken materially, and when you just look at it from a technical basis, I mean, that you could make an argument, yes, this is a 61.8% retracement level, but I was pointing out today in some videos for subscribers, this looks like a very symmetrical type of shape in the dollar where you have this area as the midpoint. I mean, clearly there was a rally, then a pause, and a rally, then a pause, a rally and a pause, and then the rally, and you could see it coming down. It's a very similar type of shape that's forming, and so it makes you wonder if there's still one more leg down coming in the dollar index, and it certainly could be the case that's what we're likely to see. And if that's going to work out that way, then you got to really think that it's either going to be because the euro is moving higher and continuing to strengthen, or it's because the pound is also continuing to strengthen. And so that's, the question is that we might get another couple of days of a rally here or there. But I think overall, if there's this broader shift going on, this regime change going on in the marketplace, it's going to be much harder to sustain it. We're not really also seeing any real improvements in the spread between, the US 10 and the Japanese 10. That continues to be below resistance. And again, depending on how the BOJ meeting goes on Tuesday night, that can largely impact and decide, which way Japanese rates are going to go. It's very clear there that they're probably going to continue to raise rates. And if they're going to continue to raise rates, then there's a very strong possibility we continue to see the Japanese 10-year actually continue to move higher. And when again, this is something I went over during the week with subscribers and members, was, he had an opportunity really to push back against the recent movement we've seen in the Japanese 10-year, and he really didn't take that opportunity to push back against that move. He actually was kind of saying, he was kind of giving the green light for the move that's already happened, and almost in a way kind of continuing to go on. And so it makes you wonder, will the 10-year rate continue to climb in Japan? Because the more it continues to climb, the more that spread's going to continue to narrow. The more the spread continues to narrow, the more likely it is that you're going to see the Japanese yen continue to strengthen. The more likely it is that you're going to continue to see the unwind of what we've been seeing already in the equity markets. That's why I say this isn't really a very clear-cut environment. There are some things that are very favorable for a very sharp, type of rally to continue next week, at least at the start of it, and maybe even towards the tail end. The other thing, which is also kind of going with this idea that we're likely to see the yen continue to strengthen, is that we've seen the USD JPY 5-year currency swap spread really begin, to move higher, to narrow, heading towards zero, indicating that dollar funding pressures have really eased, and there's just not that much demand to own or to obtain dollars. And this could really be a signal that, that could be because really you're seeing, flow of funds returning, basically the selling of dollars and the flow funds, the demand for yen actually increasing. And it could really be an indication that if this spread continues to move higher, that we're just going to continue to see the yen really begin to strengthen more materially versus the dollar. And certainly this move would suggest that the move we've been seeing in the yen, of the strengthening that is a legitimate move. And it could only intensify if we were to get a scenario where the BOJ is more hawkish or really allows for the continued appreciation or the continued depreciation of bond prices and the appreciation of bond yields in Japan. And so that will make, Tuesday's Tuesday U.S. time, Wednesday BOJ meeting very important. And what makes it even more important is it's going to come right in front of the Fed meeting on Wednesday afternoon. And, depending on how the Fed sort of leans, that can also play a major role in things. And so when I look at where the current setup is in specifically in the relationship between these two things, the U.S. 10-year minus the Japanese 10-year, I don't like that this has broken support and we've managed to stay below it now for a couple of days, because it certainly looks like this is a distribution type of pattern and that we're going to continue to see this spread narrow. And the question, of course, is which is the part that's going to be doing the heavy lifting. Obviously, it was the U.S. 10-year rate rising that was doing the heavy lifting, allowing the spread to widen. The question is going to become, what's going to make this narrow? Is it going to be the Japanese 10-year rate rising significantly, or is it going to be the 10-year U.S. rate falling? Both will have very different meanings, and so that's really what the tricky part is. And again, I think in either scenario, as long as this continues to decline and we continue to see demand for yen increase, I think there's a good chance that what we've been seeing in the equity market here in the U.S. can probably continues. Because again, when you look at the way the dollar looks technically, if the dollar is going to weaken and it's going to be due to the euro rising and the yen weakening, I think that really sets up a bad scenario again for U.S. equities. And that's pretty much been at play now for really this entire sell-off we've been seeing. Anyway, I hope you have a good Friday evening. Please remember to subscribe to this channel, like this video, and share it with your friends. Have a great night. Bye.